Hello and welcome to the Market Review, where we bring you key developments in the financial and capital market as it affects the economy. Today we'll be discussing the rising inflation trends and implications for investors in the Nigerian capital market. With me to have this conversation is Professor Uche Uwaleke, President, Association of Capital Market Academics of Nigeria, ACMAN. Nice to have you on the program, Prof.
Thank you very much. It's indeed my pleasure.
Yes, and good morning to you. Before we begin the conversation, let's take a recap of market stories from last week. The Lagos Commodities and Futures Exchange, as part of preparations for its full-blown trading, announced that it has inducted 50 senior commodities brokers. We'll keep that space and continue to monitor activities there. Also last week, the FMDK Securities Exchange Limited announced the approval for the quotation of the NECIT Nigeria Limited 2.17 billion naira Series 1 commercial paper under its 20 billion naira commercial paper issuance program on its platform. And the Nigeria Exchange Limited, also last week, and International Finance Corporation forged a partnership that's designed to develop sustainable financial instruments in the capital market. We go on a break, and when we return, we'll get down to the conversation.
Tune in to Web TV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, millennial talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content. Watch Web TV. Same news, different perspective.
Welcome back, and if you're joining us, it is the Market Review, and we're discussing rising inflation trends and implications for investors in the Nigerian capital market. My guest is Professor Uche Uwaleke, President, Association of Capital Market Academics of Nigeria. Prof, the National Bureau of Statistics last week released the inflation report for February 2022, and it showed inflation is still on a rise to 15.7%. How is this having an impact on the markets?
The trend in inflation rates, unfortunately, is likely going to continue for quite some time as a result of obvious reasons, one of which is the current energy crisis that the country is going through. Of course, you know, the rising cost of PMS, the rising cost of diesel, the rising cost of energy in general, including electricity tariffs that have just been removed or increased rather. That's talking about subsidy that has been removed. All these will combine to exert pressure on inflation. So I see inflationary trend, continuing along this trajectory. That is the upward trajectory in the coming days and months, and that will of course impact the market investment climate negatively. As you know, investors are usually after returns, real rate of returns that are positive. So when the real rate of return, which of course you know is that return adjusted for inflation, if it is negative, it discourages investments. As we speak, the rate of return is even in the negative territory, because if you look at the year-to-date return that the market has delivered since January, is well below the inflation rate of 15.7%. So that tells you that real rate of return on the average is negative. So if inflation rate continues to go up, what that means is that it further drags the real rate of return into the negative territory and discourages investment. So rising inflation rate is not good for investments at all. And of course, we know why this is happening. I mentioned to you earlier the rising cost of energy, which we all know is manifesting in the high cost of transportation. If you look at the MBS report, for example, the MBS report talked about the inflation rate being, food inflation, for example, being highest in Kogi State, and the food inflation being lowest in Sokoto. And if you look at the gap between the inflation rates of Sokoto and Kogi State, which is over 20% for Kogi State, you realize that this wide gap may be accounted for by the high cost of transportation. Moving goods, for example, from places where they are low priced to places where they are high priced, could result in this kind of wide variance between the place of highest inflation rate and the place of lowest inflation rate. So high transport cost is a major factor contributing to the high inflation rate we have in Nigeria today. And as I said earlier on, this trend unfortunately may likely continue, worsened by or aggravated by the ongoing Russia-Ukraine crisis. As you know, food inflation continues to be the major challenge we are having in Nigeria, still at over 17%. And in the coming months, we hear that wheat and corn may become very, very scarce. And that's because between Russia and Ukraine, these two countries account for over 30% of wheat exports, globally. We also have, these are also countries that command a sizable share of, corn exports. So we are likely to experience the impact of that, the wheat shortages and corn shortages, as a result of the war in Russia and Ukraine. And that will impact, again, negatively on food inflation in Nigeria. So all of this, of course, don't augur well for investors in the market.
Oh, but it's just a reality now that the rising trend of inflation will impact the returns, and everyone is always conscious about the returns in this time. There's another trend that we've observed, that's the trend of the US Fed increasing or hiking its interest rate, and Bank of England just happening this month. The US Fed rose by 0.4%, and that of Bank of England, the range of 0.75%. That reveals their hawkish monetary policy responses to the various challenges that you've highlighted, the Russia-Ukraine tensions and other issues of inflation. How will this affect the MPC decision? Because, of course, the Central Bank of Nigeria, the Monetary Policy Committee, will be weighing several other developments, including the rising inflation rate.
Oh, yes. But that's going to be a major consideration by the Monetary Policy Committee. What is going on now in the US in terms of they are global. Of course, they consider both global and local developments. So with respect to global developments, Russia-Ukraine issue is there, and also the rising inflation in the US, which is now necessitating the Fed, to change stance. To only last Wednesday increase the Fed fund rate, and there is every indication that this aggressive posture again of the Fed, is likely to linger. In fact, we hear that the Fed is looking at getting interest rates up to as high as 2%, before the end of the year. So, and that's on the back of rising inflation. And of course, if interest rates go up in the US, for example, what that means is that it triggers capital flow reversals, especially with respect to developing countries, emerging economies, including Nigeria. So when rates go up in the US, okay, bond yields, for example, go up. And if bond yields go up, okay, you find investors, rebalancing in favor of investments in the US away from emerging economies, including Nigeria. And of course, that in Nigeria today, the proportion of foreign investors in our markets, has been on the decline. And this decline started since the COVID. So foreign investors have not been participating in the market as they used to. A lot of them have left. And I'm saying that with rising interest rates in the US, we'll see more foreign investors exit. And even those in the US and UK who we are planning to come before will have a rethink. Wouldn't come because of the high returns that the US economy is now promising. When I say high returns, I mean higher returns on a risk-adjusted basis. Because as interest rates go up in the US, the returns in the US on a risk-adjusted basis, also increases. So investors migrate to US, and that will have a negative impact on foreign portfolio investments in Nigeria. Remember too, it will also impact negatively the external reserves, because as foreign portfolio investors leave, external reserves also get affected, and that will also have a negative impact on the forex market. So the pressure on the forex market, will is likely to increase. So if you like, the normalization of interest rates that the Fed, is about pursuing now. When we say normalization, we mean that the Fed is desirous of increasing interest rates from its near zero position. So the normalization, which also entails an end or a slowdown, if you like, a slowdown in the bond purchase program of the Fed, will all result in investors, fleeing Nigeria, and those two that are in the US, sitting on the fence, not wanting to come. Of course, if you look at the capital importation reports by the National Bureau of Statistics, the bulk of capital importation in Nigeria come from two countries, the UK and the US. These are the two countries in terms of capital importation by destination. These are the two major ones. And the Russia-Ukraine crisis, because these countries are involved one with another, it has created uncertainty to the point where investors from these countries are currently sitting fence. They wouldn't want to take so much risk by investing in emerging economies, including Nigeria. So this situation will be compounded with the US increase in rates. So I think the MPC will look at that. The MPC will consider the rising inflation rate in Nigeria, and it will consider the rising interest rates, flow reversal. Of course, it's going to be for the MPC is going to be a tricky balance. Yes, the GDP has started improving in Nigeria, but on the other hand, exchange rates is there's also pressure on exchange rates. You see the gap between the official and the parallel market rate is still there. So the MPC may, in my view, is likely to increase the MPR. If it doesn't happen in March, it will happen in May. They will run away from it. The rates are likely to be adjusted upwards. The MPC is likely to change its stance, its current accommodative policy stance, to see how they can also rein in inflation, reduce pressure on exchange rates, as well as curb capital flow reversals as a result of global developments. So this is what I see likely to happen. And of course, if the rates if MPC adopts a hawkish stance and increases rates, it will have a negative impact on the stock market because as we saw previously, portfolio managers, fund managers will want to also rebalance away from equities as bond yields go up. So equities market will be affected if MPC increases any of the policy parameters, which is what is likely to happen.
Prof, in 30 seconds, what would you advise investors in this period?
Yes, the safest bet, a very safe bet for investors will be to ensure that any portfolio they are holding is well diversified. Diversified in the sense that it is having securities, bonds, equities, ETFs, all manner of securities that are not positively correlated, as we say in theory. So is to ensure that the portfolios are well diversified, one, and of course to also invest based on not based on hunches, based on a thorough research. And this thorough research is what usually fund managers provide. Okay, so rather than doing direct investments, this is the time to engage portfolio managers, engage fund managers, engage investment advisors when any investment is about to happen. And such investments must be based on research, and that is where companies like ProShare should come in, advising investors on how to ensure that their investments, for example, are not it's not the case of putting all one's eggs in one basket. So portfolio diversification is the key now. But it's not, again, this is not the time to panic and start selling stocks. It's not the time to sell stocks at all. It is the time to, where possible, identify undervalued stocks. This is the time to identify undervalued stocks because a number of our companies have released good results. Yeah. So stocks are undervalued at the moment. This time to undervalue and then invest and then take positions in those stocks and then invest in those stocks. So this is a time for investments, actually, not a time for divestment or sell.
Yeah. So thank you very much, Professor Uche Uwaleke, President of the Association of Capital Market Academics of Nigeria, for those very clear advice and analysis on rising inflation trends and implications for investors in the Nigerian capital market. That will be all for this edition of the Market Review Show. If you have questions, comments, or suggestions on rising inflation trends and implications for investors in the Nigerian capital market, please log on to www.proshareng.com to get our latest stories and information and analysis. Also, you can send those questions and comments to Ottoabasi at proshareng.com and we'll respond to you. Don't forget that today is the big day. The Monetary Policy Committee of the Central Bank of Nigeria will be releasing a statement to the Central Bank of Nigeria Governor, Mr. Godwin Emefiele, on the monetary policy rate for Nigeria and other parameters. That will be a very major news for the financial and capital market. And ProShare, you can monitor our social media handles and our website to get the latest news and information around that. Also, follow our social media platforms displayed on the screen. Thank you for being part of the show, and don't forget that you need to be informed to make the wise investment decisions. Thank you for watching, and have a nice day.